and showing that we're not seeing a labor market problem yet.
Mike, thank you, sir. Mike McKee's going to have the numbers for you in just a moment. I thought maybe October's too soon for there to be some real division at this Federal Reserve. Betsy Duke thinks you might see it next week. Coming up on the program, September CPI, moments away. From New York City this morning, good morning.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
So we had to wait a while. This is it, seconds away. CPI data in America. Your scores heading into that data look like this. Equity futures on the S&P 500 up by 1/3%. On the S&P, on the Nasdaq 100 up by 0.5. Heading towards a second consecutive week of gains in the bond market.
That is
2-year, 10-year,
such
30-year
a
bond yields
crazy pump.
in the last 24 hours. Up again this morning. 10s at 4, 30s at 4.59. For your economic data for inflation in America, here's Mike McKee. Good morning, Mike.
Good morning, John. We have a little bit of good news here as headline inflation comes in up 0.3 on the month. The forecast was for 0.4, and core comes in up just 0.2%. Forecast was for 0.3. We're still at 3%, though. Instead of 3.1%, as was forecast for both numbers, we get a 3% handle for both headline and core in terms of where we are for the total month here. We're going to have to check out the overall numbers here, but let me give you a few before we check the markets. Food prices, and this has been something that people have been worried about, only up 0.2 after being up 0.5 in the month of August. Energy prices in terms of gasoline up 4.1%. That added to inflation definitely. It was only up 1.9% the month before. And here's something good, car prices. New vehicle prices up just 0.2%. We thought we might see a jump because of the new models coming in. Used car prices are down 0.4 on the month. Apparel, though, a big rise, 0.7 during the month after 0.5 the months before. Services were up 0.2% during the month, and goods up 0.2%. So inflation restrained, Fed is a go.
Mike, that is what we call the right kind of downside surprise on headline and on core.
These lot are funny, man.
Inflation comes in at 0.3. The estimate in our survey
These lot are
is
funny.
0.4. Core CPI month over month comes in at 0.2. The estimate in our survey 0.3. Off the back of that, push it through the bond market. 2-year, 10-year, 30-year bond yields declining as you might expect, particularly at the front end of the curve. We're down by 4 basis points to 345. Take the bond move, push it through foreign exchange. What have you got? Some dollar weakness, euro dollar up to 116.40. And ultimately, with that kind of yield move, equities up by 0.7% on the S&P 500 and some outperformance, some big outperformance on small caps. Bramo up by 1.6%.
That was exactly where I went to, this idea of how much this is going to help some of the smaller and mid-sized companies that really have been more significantly affected by higher rates. This is a clear signal to the Fed that they can go for 25 basis points. My question is, how long before we start to see some analysts saying this means they can go 50 or something of that nature? Not clear that that's exactly what's being priced in, but definitely a sigh of relief.
And Mike, I'm sure you've got another take on the data, but I've got another question on the Federal Reserve, and if we can deal with that up front. I think for many people, this data this morning wasn't going to change whether the Fed will or won't go next Wednesday. Does it give them a little bit more space to guide beyond October when the chairman sits in that news conference and addresses you directly?
I don't think it really does, in the sense that we are flying blind right now in the month of October, and when they get to December, they may not have any October data, and who knows whether they'll have November data. So at that point, they're really not going to be sure of where we are with inflation, and they're certainly maybe not going to know within a reasonable guess of what happens with labor market. So I think you have to assume that December is going to be up in the air until at least we know when this shutdown ends and data starts coming back in again. Things we want to note here for you in terms of prices, rent of shelter, we're talking about here the overall housing numbers that play into services, up by just 1.4%. No, I'm sorry, I'm reading the wrong one. By just 0.2, which is good news because shelter has been coming down. Owner's equivalent rent up just 0.1. I don't have the comparison, but that is the lowest in many, many, many months. And remember how last year we were always worried about when would housing come down. So as I mentioned, we're also seeing gasoline prices were up a lot. Food prices up 0.2. Food at home up 0.3. So still a little bit of inflation at the grocery store. Motor vehicle insurance down 0.4. That was one that was rising big. So it looks like we've seen a kind of a rollover in inflation. Airline fares up just 2.7%. They were up 5.9% in the month of August. So inflation has rolled over, at least in the month of September, and this is good news for those who want a Fed rate cut.
Mike, I feel like we're out of practice. It's been so long. Mike McKee, thank you, sir. Some economic data to go through. Yields take another leg lower at the front end of the curve. We're down by 5, another leg higher in the equity market. Can see that across the board down the S&P, on the NASDAQ, on the Russell. We turn briefly to foreign exchange as well. Just a little hint of dollar weakness and some euro strength. Data out of Europe was pretty good as well this morning. Eurozone PMIs, one of the best reads we've seen going back to 2024. Look out for the US PMIs a little bit later on this morning. If you are just joining us, a downside surprise on headline and core CPI, unlocking some lower bond yields this morning, going into that Federal Reserve decision next Wednesday. Joining us now to discuss is Tiffany Wilding of PIMCO. Tiffany, welcome to the program. Is this a source of comfort for this Federal Reserve next week?
Well, I mean, I don't know. I mean, I think certainly it's good news on the inflationary pressure.
You don't know.
But the argument that we've been making,
That is
which
crazy.
I think is symptomatic of this report, is that the economic adjustment that we're seeing to tariffs is coming through less on a price adjustment. And instead, companies are finding ways to defend margins by
Still waiting for gold, man. See what gold wants to do.
The fact that you saw another headline this morning around a large retailer, that is doing, some layoffs at the, kind of higher executive levels. That's just in our minds symptomatic of that.
Because the only benefit with this drop is that we've taken out yesterday's low.
So, what that means for the Federal Reserve is that there is some downside risk to the labor market here. So I don't know that they should be, completely, taking a sigh of relief here. We need to see the labor market data, obviously, when the government reopens. But as you and Mike mentioned, we do think they cut in October. And of course, the median expectation from the Fed is that they'll cut again in December.
How much of a forward look can they give us at the October meeting, Tiffany? When Chairman Powell goes into the news conference, he doesn't have much visibility on anything right now. How much guidance can he offer us for December and beyond?
Yeah, I think it's incredibly tricky, and I'm not sure that they will offer a lot of guidance. I think they're going to say that we don't have a lot of data to go on here. There's private sources of data, but even there, it appears that some of the Fed's, the previous sources of private data that they got in the labor market, maybe they're not getting anymore. So it is a much more tricky situation for the Fed. They're going to be looking at markets and I think the news flow in order to kind of figure out what's going on here. And I think it's going to be really tough for him in terms of guiding any further.
Tiffany, a lot of people have been looking at the housing market in particular as a sign of disinflation going forward. And one thing that Mike pointed to was owner's equivalent rent. Looking at this, it just looks like inflation in owner's equivalent rent has fallen to the lowest pace going back to 2021 with a pretty big decline, which is one thing that's giving fuel to some of the enthusiasm in bond markets this morning. I'm just wondering how big of a tell that is for you.
Yeah, no, I think that the normalization in housing and rents is something that the economics community has expected for some time, and I would argue that it's delayed, and it was delayed because we saw a really big immigration boom over the last couple of years. Now, obviously, that the immigration policy has taken a big U-turn, you're not seeing those tailwinds of additional population coming into the United States needing housing. And as a result of that, you're seeing rents cool off quite a bit. So I don't think it's that surprising, but I do think it's, one of the things that should give the Federal Reserve comfort, that that inflationary pressures outside of, some tariff-related pass-through are pretty benign at this point.
Given the fact that we're seeing no inflationary pressures to note that really are even beyond what people expected, and you are getting these announcements, you were talking about the Target announcements without naming them, laying off about 1,000 people and removing 800 jobs from their listings. We also saw GM announcing a round of job cuts this morning. I'm just wondering how much these are just anecdotes and typical versus something that really is a softening that is behind the disinflation as well as the concerns that the Fed has about the labor market.
Yeah, again, we think it's very symptomatic of how we see the economy that's ultimately adjusting to tariffs. I think the really big surprise this year coming into the year and thinking about tariffs is that you'd get some price level adjustment. And there's multiple ways that companies can adjust to this. And I think what we're learning is that, they're not fully adjusting prices and that they're trying to offset costs in other ways. And I think the fact that you're seeing this AI investment boom and some broadening out just in the diffusion of AI technology, companies are hoping to get some labor-saving cost benefits here. And investing in capital because of the new tax law, the One Big Beautiful Bill Act, gives you pretty big, tax incentives with upfront capital expensing. So I think companies are really just making this adjustment, more so through the labor market. And in terms of the Federal Reserve and their mandate, that just suggests that they have more room to start to adjust policy back towards neutral. If they do cut 2 more times this year, they would be, 3.5, which is kind of the upper end of the range of neutral estimates that they have. And so getting back there and making that adjustment, seems very reasonable to us, just given the information that's coming in.
Tiffany, when you say labor-saving cost benefits, should we all be expecting more layoffs then to be announced in 2026?
Well, I mean, I think the economy will need to go through an adjustment as a result of, you know, these transitions that we're seeing, whether it be, you know, the policy-related transitions this year or, you know, this tech, you know, sort of tech transition that we're seeing. You know, it does seem like
New
AI
all-time
is
highs
moving
once
pretty
again.
quickly. You know, I think it's, you know,
All-time
it's
high
still
after
uncertain
all-time high
how
after
much
all-time high
productivity
after
gains
all-time
we'll
high.
actually get, and how that will, you know, save costs for companies. You know, but I think we are starting to see the effects of that. I think you could start to see it at announcements, layoff announcements as well at some of the tech companies. You know, it is displacing some workers. Now, I think what's harder to understand is, you know, eventually it will also create new jobs, and how quickly will that happen, and what those new jobs will be is more difficult to forecast. But I think at least in the near term, you will see some, you know, some labor-saving, you know, displacement here, and the companies need that and are forced to try to get it because they have more tariff-related costs.
Tiffany, thank you. Tiffany Welding there of PIMCO. It's why so many on the committee right now are prioritising the one side of the mandate. To take stock of things, though, unemployment in the low 4s, headline inflation still at 3%. There's a lot of people out there still asking the same question. There's some hawks on the committee. They'll say the same thing. What's the rush? Why go again?
And the Fed's still going to cut rates, so they can ask questions all that they want. And ultimately, how they justify it is going to be that we are at restrictive areas, so we have some room to have these insurance cuts. You are asking the right question about long term. Can they signal beyond that level, those easy insurance cuts, about how far they can cut into just what a lot of people can't determine is the neutral rate?
It gets harder, that's for sure. Equities roll over just a bit after spiking, still positive by 0.5%. In the bond market, off the back of the right kind of downside surprise on the CPI report, yields are a little bit lower, but off session lows. We're down 3 or 4 basis points now on 2 at 345. Let's give an update on stories worldwide with your Bloomberg brief. Here's Yahira. Hey, Yahira.
Hi, John. President Donald Trump has terminated trade talks with Canada. The president posted on Truth Social this morning. Canada took a big buy ad saying that Ronald Reagan did not like tariffs when actually he loved tariffs for our country. Ontario Premier Doug Ford responding on X, writing, Canada and the U.S. are friends, neighbors, and allies. President Reagan knew that we are stronger together. Meanwhile, this just in, General Motors is laying off more than 200 workers, mostly affecting tech center employees in Warren, Michigan. The cuts come just after GM raised its profit guidance for the year earlier this week. The news also follows a post in the last hour from President Trump, who touted the positive impact of tariffs on the company. Shares are up nearly 1%. And the Trump administration is preparing a proposal to open almost all U.S. coastal waters to new offshore oil drilling, despite opposition from state governors. Sources telling us here at Bloomberg that the draft plan for selling oil leases includes waters near the southeast U.S. that President Trump tried to close off while campaigning for re-election 5 years ago. That's your Bloomberg brief. John?
Yahira, thank you. Appreciate it. Thanks for this morning. Up next, we'll catch up with David Kelly of JP Morgan Asset Management as we break down the latest CPI data. Plus, Danny's got some morning movers. Beyond Meat, up on a revenue beat. That stock is higher by 11%.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The open about 43 minutes away, and we're looking to add some weight to this rally this morning. We're up by 0.6% on the S&P, on the Nasdaq up by 0.9, on the Russell. Small caps up by 1.6 following a downside surprise on inflation data. Up on the week, up on the session with your morning movers. Here's Danny. Hey, Danny.
Hey, John. It's the poster child for the meme stock rally renewed. Beyond Meat, the company that's up more than 300% so far this week. Finally, some fundamentals to trade on. Beyond Meat reporting earnings, EPS coming in better than expected. It's a company that, again, fundamentally has been struggling, giving a pullback in some of the meat alternative products that they've been offering. But the earnings come in better, so you get this renewed bout of buying, up 11.6% in the pre-market. Shorts still exist in this company, so there still is more room for a short squeeze. Elsewhere in earnings, the big one after the bell yesterday was Intel, and what a result it was. A sunny outlook from Intel, a return to profitability given all of their partnerships, but it was the old school business, not building out AI. It was PCs that seemed to really be benefiting them. We also got earnings after the bell yesterday from Deckers, not so sunny. Shares falling 13%, the maker of UGG and Hoka, cutting their second half outlook. The CFO getting on the call and saying it's a consumer that's a little bit hesitant. They feel the price raises from tariffs, and they are pulling back because of it. They did say they had about $150 million impairment charge from tariffs, but they are working through that, trying to mitigate some of the costs. John.
Danny, thank you. Looking forward to the coverage. We got a consumer problem or a Deckers problem?